In this video, I want to pass to you these two secret moving average strategies that I've been using for a very long time now, and it has really helped me in my trading journey, guys. I want to pass it to you in this video so that you can also see the things I did with this moving average, and you can also get to learn it and know how to use it on the market. Don't forget, you have to apply it on your demo account first before you do anything on your real account. 2 weeks, 1 month, you have applied it, you have learned it, you have mastered it also for yourself, then boom, you start making a lot of money for yourself also. So in this video, I would also love to tell you what a moving average is, because some people here don't even know what the moving average is. They just hear the name moving average all the time. They don't even know the work of this moving average, also how to find it, and every other thing I would love to tell you in this video. But let's start with what is a moving average. So a moving average is a tool in the market that helps you to calculate the price of an asset over a specific period of time. So that's to tell you that whenever the market is moving, the moving average is also moving with the market. That's to tell you that it's following up with the market to let you know where exactly the market is going to, and help you calculate some things based on your own settings on the moving average. So that's why we have our own settings, which we're going to apply in this video to tell you what it's going to do for us and what it's not going to do for us on the chart. So I would love to tell you everything as we get into the chart also. So before we get into the chart, I would also love to tell you on how to apply a moving average, because if you don't have the right knowledge on how to apply these, you're still gonna lose money from the market. So this is how to apply a moving average. When you get a moving average, the first thing you have to do is make sure you know the movement of the market. Very important. Do not take this as a joke. Do not take this on serious, because this is the major place whereby you get to know what is really going to happen in the market. So right now, if I want to ever use any moving average, the first thing I look out for is the trend, which is where the market is actually going to. The trend is the money, the trend is everything in the market, and you have to know it. So once I identify the trend of the market for that day, I will have to kind of know where to follow up with my moving average, because even the moving average follows up with the trend. So you have to know the trend. Very important. Do not play with this. Another thing you have to keep in mind is do not trade this moving average in consolidating markets. Sometimes people get to trade consolidating market because they just feel like they want to trade and make quick money from the market. Trust me, it's gonna ruin you, it's gonna ruin your account, it's gonna make a lot of things go bad for you. So you have to kind of wait for the market to stop consolidating, find a market that's a kind of smooth, that's moving as you want, and it's also following the trend that you saw before you enter the market. Then as you find that trend in the market, you find that consolidation market, you leave the consolidating part and focus on the trending part. So follow up with the trend, as I said before. Very important whenever you want to trade anything, any asset in the market. And the third thing is, before you apply it to your real account, you have to make sure you apply it on your demo account. Do not rush things. I know you want to make money. I know you want to make a lot of money this year or next year. I want you to kind of calm down first. Do the counts and make sure that you apply these on your demo account for some times, like 1 month or 2 weeks, 3 weeks. Get to master it. Then after mastering it, then you can just try to kind of use it on your real account, that's your life account, and make reasonable profit from the market, because you have basic knowledge about it first. Very important, guys. So that's what you need to know about this before we get into the video. So let's get into the video right now.
Yeah, this is the time for me to show you the two indicators that I use in trading the market right now. Let me show you how these indicators works for me. But first of all, we have to put the settings on. We have to put the settings of the indicator and make sure we put it the right way so that we don't have to mistake anything. So let's get into the settings point. You can see these two around this place. You can see that thing that looks like F. That's the sign for indicators in the market. So I'll just tap on it right now, and I'll press on main window, just like the way we used to do it. We'll press on the main window, then we'll find the moving average that we're looking for, because we're going to use a moving average on these. You can see that we have other indicators, but those ones are not our target for today. Maybe I will explain some other ones that I've used in the past and also gave me good results in the past. So let me just explain this moving average one. Let's use the one for today. So let's press on moving average. The period for this one is 22. So we're going to change this 200 to 22. So I'm going to press 22 right now. The shift is 0. The method is exponential. Wow, we have exponential already. But in case you have other ones, like they give other options like simple, smooth, linear weighted, anyone, you can just choose on those ones, but we are choosing exponential. So let's check the apply to also. The apply to said apply to weighted close. Apply to weighted close bracket HLCC/4. Okay, so let's get to that point. You can see apply to, okay, weighted close HLCC. All right, so I'm gonna tap on that just like the way we did right now. We have the style, so we're gonna pull our style so that it will have a specific color, you know, a color that we want to use on this. So I think we should use blue color on this. Let's use blue color on this. So we're gonna use blue color on this, and we're gonna press on done. So alright, we have the first indicator already. Let me place the second one before I explain the works of these two indicators in the market. So let's go back to the same place. Let's press on main window also. I'll press on moving averages. We have to bring in the second one at this point. So the period of this second one is 10. So we are going to press 10 right now. Alright, let me drag it back to this point. Okay, so I've pressed 10 already, and the shift is 0. The method is exponential, so we are still going to press exponential on this. Then apply to what? Apply to close only. You can see that there's a difference between close and weighted close. So all these things you have to make sure check it out before you apply it on anyone. So this one says you apply it to close, so I'm gonna press on that close right now. I've tapped on the close already. Everything has changed. It has left from that weighted close, so it's on close now. And also the style, okay, let's use on that color so it will look different, so it won't be the same thing. Let's see if we can use something like okay, let's use black on this. Let's use black. So I'll tap on black right now. All right, and I'll tap on okay. It looks good, it looks good. And trust me, this is one of the simplest moving average you can ever use on this chart, man. I've been using this for some times, and it's very easy to use. You can see many times that the things that work. I will explain everything for you so you can just understand it. You don't have to put all the moving average on your screen before you can see good result from the market. So I'll just show you all these things and show you how these things work in the market. So let's get into the explanation of the moving averages. Okay, the first one, which is the blue one, helps you to identify when retracement finishes in the market, and also help you in identify exits and entries in the market. That's the work of the blue one. While the second one, which is the black one, functions with the blue one in order to help you get trigger points in the market, places whereby you can just get the market from and you will see significant results from the market. So that's the work of this second one, which is the black one. So let me tell you the major work of these two indicators together. A lot of people will just tell you that indicator crosses and blah 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 blah, but in this place I will be showing you pure examples that this one works many times. I'll be starting from the bigger time frames, where I would just like to explain everything from, you know, whenever you want to trade anything in the market, you have to start from the bigger time frames. So we start from the weekly time frame. You can see this point, bro. If you got to trade around this place, like bro, you should be very rich at this point. This moving average works majorly when the market crosses each other, just like this place whereby you can see the market had a cross around this place. The two indicators crossed each other. We had some good downtrend in this market, and majorly you can see that we are currently on an uptrend and the market is currently buying massively, and the indicator also crossed around this place. That's a very big sign that this is gonna work out. So look at this place whereby the indicator fell off from this point. Also the market just had to cross each other at this point, and the market started falling at that point. This is a weekly time frame, and guess what? If you can get a good trade from this place to this place, you're gonna make a whole lot of money from the market using this strategy only. All you just have to do is make sure you wait till when the market wants to cross again, then you can just get out of the trade. Look at this place now. Look at the distance between these two places. For instance, I took a trade around this place, which is this side where the first cross happened, and look at where the market is trying to cross again. From this place to this point, it's a whole lot of money already. All you just have to do is make sure you don't go against the trend also, because just like the way we are doing this thing, we are following the trend. You can see that this is a downtrend. So when the market crosses on a downtrend, you have to kind of sell at that point. If you are buying when the market is crossing on a downtrend, then you are trying to lose your money by yourself. You are fooling yourself. So you have to kind of sell when the market crosses on a downtrend. And you can see this point whereby the market had to cross on this point again, like showing us that this is going to be an uptrend. So from here also, we also had a good uptrend in the market. So look at this place whereby the market is trying to buy, like it's not even trying to buy again, the market is buying already. So the market came around this place and got a cross again. The two indicators cross each other. So I'm even looking up to taking a trade around this point. You can see my lines around this place. That's my horizontal lines, which I normally use in order to get more confirmation, because I don't majorly use indicators for major confirmations. I just use it to know where the trend is going to exactly. Then I have to kind of find my entries using my horizontal lines in the market, because I have to drag it from the higher time frame, bring it down to the lower time frame. So look at what happened here. You can see that this market has crossed, the two indicators has crossed each other. So we are looking up towards buy opportunities in the market until we have another cross to the downside. So look at what we're gonna do on the daily time frame right now. So this is the daily time frame where you can see where the movement started from. You can see that this place, the indicator almost crossed. That's to tell you that if it doesn't cross, it's not strong enough to take you to where you want to see the market to. So we came to this point. You can see that little space around this place. So the market managed to cross around this place. As far as the two indicators have gone below each other, that's showing us that there's a cross around that place. Then just know that that movement is going to happen in the market. That's just the truth about it. So look at what the market did at this point. The market just got a cross, and ever since then the market hasn't tried to cross again. So that's to tell you that this movement is still very strong. Even looking at this point whereby the market behaved as if it's almost close to each other trying to cross again, but the market still didn't cross. That's to tell you that these things are perfect, bro. So what I'm going to do right now is look up to an opportunity around this place. We're kind of waiting for the market to get some kind of retracement, retrace towards this side, which is our 216180.23. That's the point where I'm expecting the market to retrace back to. Then from there we will enter our trade and make good profit from the market. So we also have another time frame here, which is the H4 time frame. So after doing our analysis on the W1, the D1, we have to also come back to the H4, because we are kind of dragging this thing from the higher time frame to the lower time frame. So we're doing it more like a top-down analysis stuff. So we have to also check this to make sure that the things we are doing in the market are going to go well with us. So look at what we're expecting in the market. This is the point whereby we're expecting the market to get to. Look at my horizontal line that I'm going to drop right now. So look at where I'm going to drop it. You can see that point. You can see where the market have tested each other around this place, and you can see this strong pin bar around this place. So this is the point whereby if the market eventually takes out, I will expect another movement in the market for now. But right now we are expecting this point, which is the 221739.85, to be our entry point at this point. And you can see that the market have even tested it already. You can see that pin bar, that red pin bar in that place, that dodgy pin bar or armor pin bar, whatever I call it. That's a very strong one in the market also. And that's it, guys, on this H4 time frame. So let's drag it up to the H1 time frame and also check up some things on that time frame also. So look at the H1 time frame right now. You cannot just kind of take entries on this lower time frame. Just like I said before, whenever you want to make analysis in the market, you have to start from the higher time frames and know where the market is exactly going to, so that whatever you're doing on the lower time frame will just be like you are looking for your entries and exit in the market. So look at this place whereby the candle and the indicators are crossing around. This is the lower time frame. So the market crossing around this place doesn't give you a clear sign that this is gonna be the movement of the market. It's just like we having retracement in the market, mostly used by scalpers or day traders. So you guys trying to keep this trade for a long time, you have to follow up with the higher time frame where we got the analysis from, just like the way we're trying to get the major analysis, the major area whereby we'll be expecting this market to be. Then from there we can kick off with the market and hold for as long as we can. So look at this place whereby this market came around. Just like the way I say, this thing is very good for day traders, scalpers, whatever trading you're gonna do. Just make sure you're following up and make sure you leave whenever they're trying to cross again. So look at this place whereby the market had to cross again. If you look at this place, the market had to cross around this zone. You can see after crossing around this zone, we had a good uptrend, because we are following up with a trend. If you go and trade against the trend, like this place that the market just crossed a little bit and you went and started trading against the trend, although you're still gonna make money, you're still gonna make little figures from the market, but that's not the major target on this asset. So we are still gonna follow up with our trend, our major trend, which says that the market is bullish. So we're gonna take the bullish move. Whatever the bullish opportunities comes in this market, we'll be taking that only. So we're gonna leave all the sell opportunities in this market and focus more on that bullish opportunities in this market. So look at what the market did around this 221850.31. So the market came around that place, as we can see, and yeah, we got a good pin bar around that place. If you check on the H4 time frame, we have a good pin bar around that place. But looking at this H1 time frame, you can see that it is more like another candle that was engulfed, or a pin bar that was almost taken out to show that there's still strength in this market, and we still expect the market to keep pushing. If you look very well, you can also see that this blue moving average is a kind of helping us in even identifying the trend of the market. You can see where the market crossed around this place, just like the way I said before. The market tried to cross around this place again, but the market couldn't cross again because the bulls are still in control, and this is a sign that the market is still on a very good buying market. So we have to plot this out as a good place whereby we are kind of expecting the market to get to. Then from there we will take our trade. So we got to this point. You can see that we got a retest around that place, even though the market did not touch it properly, but we got a retest around that place. Sometimes we get opportunities in the market whereby the market will kind of get very close to our entry points. Then from there the market will just keep going to wherever it wants to go. It might not even trigger our entry point, to just start pushing again like massively. So we still have this opportunity of taking our trade around that place. Look at the space between that place. We just calculate from this place like this to this last engulfing candle, or this candle that wick off. We just calculate as our stop loss, then we'll take our trade around that place. But look at what's going to happen on the M30 time frame right now. So look at the M30 time frame. This is where the main things work. This is where you're gonna come to the last point, which is the M15 time frame. So we have to know what is gonna happen on this one also. So look at this place now. That place we had to point out our entry. We had some kind of retest around that place before. Then we expect the market to kind of take that retest away. Look at this point in the M30 time frame. That's where we're gonna place our horizontal line around, because we can see that that's the last point, the last strong point in this market where we're expecting the market to get to. So look at what's gonna happen right now. So after dragging it to that point, you can see that the market even broke into it. So this is a kind of making us feel like this might not go as planned also, but we have to follow up with our first plan, which is if the market doesn't take this point away. Look at this place now. If the market doesn't take this point away, then we are still in a good uptrend, because the blue indicator is trying to show that this trend is still on. Then if the market takes that place away, then we expect the market to give us another different trend, because that's a trending market and the market is still following up with the trend. So we're gonna go back to this place, which is our point of entry. So let's go back to the M30 time frame. Let's see what's gonna happen right now. So look at what's gonna happen, just like the way we predicted. We predicted the market should come around that place, and look at what's gonna happen here. So the market just came to that place, got a touch and broke it a little bit, but that doesn't show that the market has lost its strength in the market. So let's see what the M15 time frame is saying to us, because we have to break this down to this point. That's the point where we take our entries, or if we want to take our sniper entries, we want to make some sniper movement in the market, we can just use the M1, the M5, but this M15 is okay. Whatever we lose there, we should be okay with it. So we're trying to see what the market has to do right now in this place. So looking at what the market has done already, the market has crossed, the two indicators have crossed already. So we are still going to kind of expect some movement, some uptrend in this place, and we're gonna put in our trade at this point. So I just on my data right now, and we can see what the market is doing. If I'm to use my price action knowledge about the market on this, I will expect the market to get back to this point. This is a point where I'm seeing the market getting back to before we can take in any entry on this chart. But look at what the market is doing already. You can see some kind of consolidation around that place. Consider the market wants to kind of consolidate a little bit, and from there the market can kick off. But I'm expecting the market to get to this 223009.80. That's my own point of entry, and that's where I want to enter from. But the major thing is that we know that the overall trend of this market is a bullish trend, so we're still gonna wait for the good bullish opportunity. Imagine if you took a trade around this place like this: 1, 2, 3, 4, 5, come on, 6 candle, bro. 6 candle on this market, which is volatility 51 years, is a very big amount of money in this market. I won't lie to you. You can just use it and get some good figures already, secure that one, then forget about this consolidation that's coming up. Before then, you should be out of the market, man. If you're a day trader, if you're a scalper, you don't need to stay too long in the market. You just have to take what the market can give you at that particular period of time. So me right now, I'm kind of expecting the market to get to this point, which is due to my own knowledge about the price action already. So I'm expecting the market to get to this point. Then from this point, we kick off with the market and we'll make reasonable profit. All I just need to know is the trend of the market. That's why I always tell you that the lower time frames gives you more noise with the indicators, but if you look clearly on the W1 time frame, you can see that we are still on a very good bullish move. So if the market hasn't taken this point away, which is the last point, that black indicator around that place, if the market hasn't taken it away, then everything is still alright. And looking at the formation of the market is trying to take this 256499.05 away, so we are still expecting a good bullish market, bro. Imagine being a day trader right now and you see where this market gives you this opportunity. Do you know how many candles you're gonna come on, bro? You're gonna pack a lot of peace from this market, bro, because this market crossed around this place and the market started going down. Look at how many candles. I can't even count them all because there are a lot of candles in this point that the indicator have given you the opportunity to pack from the market, and you know the candles are the money, so you have to pack a lot of money from it also. If you look at this point also, you can even see where the market had to a kind of cross again or get close to each other, telling us that the movement is still on. Then we had some good drop again. So after this drop, we also got another drop at this point. So imagine if you did not get the first drop around this place and you got the second drop, you're still gonna make money from this market. Or if you not get the second one, you got the third one, then at this point you just run out of the market because you can see that the market has changed in its direction of movement. So I'll be taking my first entry around this place, which is this point whereby the market is still consolidating, or we just wait for the market to stop consolidating. Then from there I can enter the market and see what the market has to do. But if this consolidation around this place doesn't move to the upside, then I will have to kind of wait for the market to get down to this point, which is the 22300.9.80. I will have to wait for the market to get to that point, then I can get my entry also. So that's all you need to know about this indicator. You can use it to make a lot of profit from the market, just like the way I'm showing you the opportunities that this indicator has. It kind of shown me many times in the market. Even this point, you can see where you have to kind of pack some good pills from the market, even as a day trader. So from this place to this place, a lot of money for you already. You're out of the market. Some day traders don't even used to hold up to 3-4 candles, but if you can hold this to this point with a good lot size or a normal lot size self, you can also still make good figures from the market. Look at this point also, whereby the market crossed together. So due to the fact that we're following the trend of the market, you can see that the market is still bullish, just like what I said before, and the market still kept moving at this point. Look at the movement from this place to this place. That's a lot of money already. Always secure profit after seeing profit. Don't just allow it to go like that. You can also see this point whereby we had a bullish move, then we came to this point, you have a liquidity around this place, then the market has to drop again because the market couldn't take this point away. This is me applying my price action knowledge with the indicator knowledge on this chart. You can see how things are flowing on this chart. So look at what the market is still doing. We are still watching the market to know what the market has for us. So I will kind of round up this place now. I will kind of wrap up this video at this point so I can go and place my stop loss, because I don't want to make this video vertical. I don't want to make it vertical, so I'll go and place my stop loss. But that doesn't define where the market is exactly trying to go to, because we are still in the consolidating market and this is not our major entry. Our major entry, according to our price action, says that we should get to this 22,309.80. That's our major entry. So let's see what the market has to do for us. Let's see what the market is going to do. Let's know what we're going to do next.
So that's all you need to know about this moving average strategy. So all you just have to do is don't forget to apply it on your demo account first before you apply it on your real account. Very important. So that's the end of the video right now. You know what to do already. If you're new to the channel, hit the subscribe button ASAP. And also don't forget to like and comment. If you have any confusion in the market, just drop it and I'll create a video about it, explaining it to you in such a way that you will have to kind of understand it faster and make reasonable money from the market. Also, just like the way we're doing, we're making some reasonable money using these simple indicators. We don't even have to stress ourselves too much in order to make this money, guys. So see you in the next video. Peace and love. Don't play.